Hi, and welcome to this installment of our Industry Leadership Series. I'm Brian Dobson, Head of SPAC and Disruptive Technology Equity Research at Chardan Capital Markets. And as always, I'll start off this call with some important disclosures. During this call, we will not be discussing Chardan research. Any discussions about research should be coordinated between a participant and their respective salesperson. Our compliance team has asked me to read this statement for the investor call. By participating in this call, our speakers attest that they have made Chardan aware of any potential conflicts, and they will not discuss any material, non-public, or confidential information that they are aware of that may breach their legal, regulatory, or fiduciary responsibility to any parties. So with that bit of business dispensed, today, I'm joined by two members of Ouster's senior leadership team, Angus Pacala, CEO and co-founder, and Anna Brunelle, Chief Financial Officer. Angus and Anna, thank you so much for joining us today. We're thrilled to have you.
Thanks, Brian. Glad to be here.
Thank you.
Great, so let's start off with a couple of big picture, high level questions. What megatrends do you believe are driving global demand in the sector, and how do they shape your outlook for the next 2 years?
Yeah, absolutely. And I'm going to just bring up slides to share and potentially reference throughout the conversation. And I do apologize for any background noise. We are visiting international teams, and the office has some background noise. But to the question, you know, Ouster originally, and still to this day, was a bet on automation as a global trend, automation technology being injected into really every area of our economy. And it's really interesting. One of the things that we saw happening in 2015 when my co-founder and I started the company was the investment, the immense amount of investment into robotaxis and automated cars was educating a generation of engineers, product people, and technologists in autonomy technology, and developing all of the peripheral algorithms and embedded processors and sensor technology that was necessary for the robotaxi industry. But then that was all propagating into these other side verticals. And some of those side verticals they're not side verticals, they're actually immense verticals that rival automotive in size. And so that spreading into all of these other areas was a major bet, the bet on autonomy generally. So we're focused on industrial, smart infrastructure, robotics, and automotive. And if you look at other sensor technologies like digital cameras, and even focus on the non-consumer markets for digital cameras, you really see a mirroring in what's happening with digital lidar in digital cameras, where the biggest non-consumer markets for digital cameras are not automotive. Actually, it's security, industrial inspection, and in aggregate, those actually rival even the automotive sector, and that's what we're seeing develop in our industry today. So that's kind of the backdrop. Is there's huge opportunity for digital lidar and sensor technologies across many different verticals. And Ouster is building products that apply across those verticals with a very focused kind of technology and product platform strategy there. But then a little more specifically diving into a couple key areas that are accelerating maybe faster than others. One is smart infrastructure. So we see global investment in public and private sector for updating and modernizing infrastructure, whether it's road infrastructure, pedestrian infrastructure, sorry about that, or private building infrastructure. They're bringing new technologies focused around lidar and perception and autonomy technology. And then the other one is in robotics and really supply chain logistics and robotics related to delivering goods in an automated way to consumers or between businesses. And so in 2021, we had huge progress. We signed over 110 smart infrastructure projects, and we're really expecting that greenfield opportunity becomes a huge a real mega trend for Ouster as a business. It's over $60 billion market for traffic infrastructure around the world. Over $32 billion worth of security cameras are sold every year. And those are, two huge kind of smart infrastructure markets that now digital lidar and autonomy technology is propagating into. And likewise, logistics, robotics, supply chain, and warehousing, especially with COVID and the supply chain disruptions, automation technology is filling the gap of labor shortages and the increased consumer demand for goods and services around the world. And so we're seeing major uptake from our customer base there as well.
Well, thanks so much for that overview. I guess, could you maybe give us a good idea of what the industry's competitive landscape is like right now, how your competitors are behaving, and I guess what the common goals are for the players in the industry?
Yeah, and it's a competitive industry for lidar hardware. Yeah, so it's an interesting and crowded market, but one of the things to understand is from my perspective and from other lidar players' perspective, it's been a multiplayer market for a very long time. We're kind of used to having this noise in the industry. When we founded the company in 2015, a number of other companies, tens of other lidar companies cropped up around that time. And it's notable from my perspective that very little has changed in the competitive landscape over the last 7 years since we started the company. So we have some other public lidar competitors that have come public, and there's 7 odd competitors there, but there's a backdrop of a number of other private companies that are still out there. And interestingly, we are still competing with the same companies that we were competing with when we brought our first products to market in 2018. And the number of companies that are actively selling products at scale into the market is very few. And Ouster is really the only company that we see as building fundamentally new technology, our digital lidar technology, and selling it competitively at scale and market. And that's something that we pride ourselves on. We talk about our third pillar of our company being our ability to execute and actually bring kind of this differentiation into the market and showing good product market fit and building to significant revenues and unit ships. So we've shipped over 10,000 units to date. And so the rhetoric and the perception of crowding in the space is actually pretty different than the number of companies actively selling appreciable numbers of product in the market. The other thing I'd say about the competitive landscape is that Ouster has a decidedly different strategy than our competitors. We believe in multi-market diversification, and that there is a bigger opportunity outside of automotive than within it. Automotive is a really compelling market for us, and we have over almost 40% of units shipped last year was in our automotive sector. So we're generating significant revenue there. But still, we've always gone after this diversification strategy, multi-market strategy, and then have a very focused effort on automotive that is different in expectation, more grounded in expectations around gross margin being lower than our competitors in automotive and higher in our non-automotive markets, and also believing strongly that price ultimately will be the differentiating feature. The affordability of the technology in automotive will be the differentiating feature there, versus our competitors thinking that other things may determine the winners in that market.
That's very interesting. And I guess while we're on the subject of competition in the market in general, what do you think are the near-term obstacles for the sector that need to be overcome?
I think the near-term obstacles for Ouster are specifically very different than the near-term obstacles for other public lidar companies. For the others, they're still in the stage of bringing their first products to market, proving product market fit, and then starting to understand scaling of their technology and the specifics of go-to-market based on that product market fit. Ouster is in a fundamentally different position. we have the product market fit. We've shipped over 10,000 sensors. We have over 600 customers. We have international sales offices all over the world, and we also have outsourced manufacturing and positive gross margins. So the economics of our business and the fundamentals are there. The manufacturing and scale is there, and the product market fit is there. So for us, we think about how can we accelerate adoption in each one of our verticals with specific go-to-market strategy that's different for industrial versus for robotics versus smart infrastructure. And that's where I think our challenge lies, is making sure that our customers' time to autonomy is sometimes what we call it, is as rapid as possible. So basically their adoption really is as rapid as possible. We're building a pretty complex business because we're serving so many different customers with so many different use cases. And so there's a strategy of building common hardware and common products that fit all these verticals, but then tailoring go-to-market between verticals and customer sets and really understanding those use cases.
Yeah, and you've touched on this a little bit, but really what makes your sensor offerings, call it, superior to those offered by your competitors?
Yeah, and I can call it, but I think we have two kind of slides on this, but Ouster has developed digital lidar technology. And the idea here is the same idea that of digital technology that has propagated basically all technology that you interact with, whether it's your computer or your cell phone or the digital cameras in your car. And the idea is to put a product or a technology onto a silicon chip and basically absorb all complexity and cost onto a silicon chip and make the product that piece of silicon. That's what digital cameras did to replace analog cameras. It's what CPUs did and GPUs did for those industries. And so you can see here, this is the digital lidar architecture is a highly advanced custom digital chip that Ouster has developed, a lens, and a laser array. And it really, at the end of the day, those are the three main components: some optics and two chips. And it's orders of magnitude lowering in BOM part count and BOM cost and manufacturability, and also scalability of the technology, because the product can be so small, so compact, so power efficient, so performant, and so affordable that it plays across verticals and it plays across customers. So that the digital technology is the differentiator here, because it's more affordable and more performant and scalable. So the other thing that we've done really effectively is build a portfolio of products that are really more firmware defined, they're not different in hardware significantly, but actually more in defining them through software to target different customer sets. And then finally, this slide speaks to why do digital products dominate and become the end state of the markets that they enter? And that's because of Moore's law, which is this exponential improvement trajectory for all digital CMOS technology, because it's all based on this CMOS complementary metal oxide semiconductor technology. And that allows for exponential improvements into digital products, which is what we've done to date. So we're really excited to continue this progression of chips that go into our products and literally double their performance every couple of years while simultaneously reducing cost.
Excellent. No, thanks for that great overview. And I want to remind our audience that if you'd like to ask a question, you can email it to me at bdobson@chardan.com, or you can drop it into the Q&A in the chat. I guess, so let's take a little bit of a deeper dive into the company. You've touched on your 4 key areas of operation. For investors that just aren't as familiar with your story, would you mind walking through a couple of the major opportunities within those segments?
Sure. So maybe the next 2 slides can speak to that, and we can cover some very specific examples as well. But we put the opportunities and the verticals that we serve into 4 big buckets: industrials, robotics, automotive, and smart infrastructure. But in reality, there are many sub-markets, which we've outlined here on this slide, and far more than this even, within each one of those major buckets. And when we've done account mapping, we think there are tens of thousands of companies that we can ultimately sell to spread across these markets. And very narrowly defining the market as hardware, lidar hardware in 2025, we see each of these being $2 to $3 billion markets. But if you step back and just look at something like the smart infrastructure market, ITS, intelligent transportation systems, the sub-vertical is a $60 billion global market. And I mentioned this before, security cameras, just the security camera hardware, $32 billion worth of security camera hardware sold every year. So if we can tap into some of these new sub-verticals and really get digital lidar technology to augment or replace legacy technologies, it can become absolutely huge for us. So, and maybe that's another comment. We're going after both existing lidar verticals or lidar markets like the industrial sector, where there's already over $1 billion worth of industrial lidar that are sold every year into the industrial sector from legacy companies that have been around for 30 odd years. And then we're also going after greenfield opportunities with customers that may have never interacted with a lidar sensor or heard of the technology before, and things like smart infrastructure. And so that's actually really exciting. There's unbounded kind of greenfield opportunity where we're doing market development, coupled with just converting legacy customers of legacy technology to the new latest and greatest 3D lidar technology that we've developed. And then there's markets like automotive, which are kind of in between. It's an emerging use case that's still got time to go before significant kind of volumes of robotaxis and consumer vehicles hit the roads, but the customer base is kind of fully convinced of lidar's benefits, and it's just a matter of time and working with customers to bring that technology to production. I do want to go back to this thought of experiment of the automation of the global supply chain, because that is a way of thinking about Ouster's business. We are literally automating every single piece of equipment, every vehicle that moves and delivers product at its various stages, from the mine and the agricultural site to the manufacturing facility to the distribution chain that goes all the way to your doorstep with last mile delivery. So Ouster is a diversified bet on the automation of the global supply chain, and we're seeing it across our 600 customers and the tens of thousands of potential customers that we're going out and we're going to win in the next couple of years.
Yeah, I think that's helpful for investors to understand. And I guess moving on from, call it, your core areas of operation, what do you see as the major catalysts coming forward for growth in your company?
Yeah, there are a number. So there are, I guess, the internal catalysts that we're really building towards. In the last quarter, actually, in the automotive sector, we announced that we had developed the first A sample, which is really the first productized version of our DF sensor line, which is our automotive focused set of products. And so that's a major catalyst because it allows us to go for the very first time with a product to automakers and work through negotiations with them with something physical that's really compelling in our hands. So the A samples is our jumping off point for reaching out to 30 odd OEMs, tier ones, and other automotive companies to develop those relationships. That's going to be big for us this year. On the established kind of diversified set of verticals, we have the L3 chip coming. So going back to this slide, the L3 chip is our next chip in our progression of Moore's law exponential improvement, and it's really one of the most significant advancements in our product capabilities that we will have ever had in the technology. I'm incredibly excited for that to come out. It's been a long time coming, and it'll be a major boost to the capabilities of our products. So that'll be a significant catalyst that not only makes kind of the established customer base incredibly excited, but it also opens up new avenues and new TAM for us with the additional benefits of the L3. And I'm being intentionally a little vague here on what exactly it does because we don't actually explain that. We're not going to do that until we release the product publicly. And then finally, and then finally, one other catalyst is just the certifications that we're bringing to our products that span markets. So it turns out that there is untapped TAM across all of our markets due to product certifications that are still pending that we're working hard on. And those product certifications are related to safety and reliability and are necessary for our sensors, for instance, to be used on an automated forklift to protect a human. You actually have to reach a safety certification in order to use the system as a safety system for around human operators. Turns out that's a really big portion of the $1 billion industrial lidar TAM today that all of a sudden gets unlocked when we get that certification. And similarly, similar certifications exist in automotive and smart infrastructure. So working hard on those, that's great kind of just catalyst that can run in parallel to our product development is product certification.
Excellent. So let's talk about your OF sensors a little bit. That's the core of your product offering as it stands right now. I guess, what's your advantage in that segment? And, I know we've spoken about Moore's Law here a lot, but I think it's important. So can you talk about how performance in those sensors should improve over the next few years?
Yeah. So I guess on what is differentiated about our OS series of products. The first is that they are available. We actually executed, this is really hard technology. It's incredibly challenging. The chip design cycles are expensive. They're risky. They take unique skill sets from the engineers versus the analog technology that our competitors have developed. So we had to build that core competency and get it right. And manufacture it at scale. But now today, so those products are available in a way that really most lidar companies start at the same time, if not brought a first product to market, if you can believe it, 7 years in. But on top of that, our products are the smallest products on market. They're the highest resolution with the highest points per second output from the devices. The fact that our OS series is a platform of products is incredibly important. So we don't sell just one product. We have over 75 unique SKUs that have tunings of field of view and resolution and price point that we sell into the market. So instead of dictating what product a customer should sell, we offer a platform of products that they can choose from, a product family for them to choose from. So all of those things, and then affordability. We can offer really compelling price points on top of all of those benefits, product features and capability that I just outlined. So the combination of price and performance is really unbeatable. And I point out again, we're really the only company operating with positive gross margins in this public peer set. So we're doing all that affordable selling while making money doing it. So, and then to the question, where is this all going in the long term? With the exponential improvements in capability comes, I think, long term, it's almost a merging of lidar with cameras. Lidars will have such good resolution and such low cost and small form factor that they will behave. It's like what's happened with digital cameras, where they can start going everywhere. And you can throw a digital camera or a digital lidar in the future into products that you really never even thought would need it to give them fundamentally new capabilities. So our world's going to be plastered with digital lidar. I think it will augment and replace a lot of digital lidar or digital camera technology with digital lidar, because an affordable digital lidar can interpret the world in a consistent way that digital camera technology plus machine learning is kind of just saturated. And it's the difference between, just to give one example, your smartphone can probably detect whether an animal is a dog with 99% accuracy. But that is not at all close to what is required for any public infrastructure, traffic project, for any robot working in a factory. It's fantastic. Machine learning plus cameras have come a long way. But digital lidar is the opportunity to bring that to 99.999% consistency across all those applications.
Yeah, it's a very exciting opportunity. Speaking of opportunities, your DF sensor suite represents a very significant push into automotive. Could you go into the attributes of that product, perhaps the pricing and what the sensor suite will look like? And how's the testing going with the automotive OEMs that you've reached out to?
Yeah, so the DF sensor suite, DF stands for digital flash. And the difference, it's the same exact technology as the OS sensors, except on the OS sensors, we spin the digital lidar head to give them 360-degree fields of view, because it turns out there's significant markets where that field of view is really important. And the digital flash series doesn't have that spinning. It has no moving parts whatsoever, and it's just the two chips and a lens for in front of the receiver. So it looks like a digital camera, really, in architecture. The benefits of the digital flash series are more compact, even more power efficient, lower cost because there's even less going on in the system, and really it's positioned for the automotive sector where all of those things are incredibly important. Ultra affordable, ultra compact, so they can go seamlessly behind the body panels of the car, and then no moving parts, so they're incredibly reliable is incredibly important for the automotive industry. And then in terms of where we are with progress and what the reception has been, so we announced last quarter that we are developing the Chronos chip, which is the first digital lidar ASIC in the DF sensors that will be productized, that'll really be put into mass production. And we're working hard on that. That'll be ready in 2023. And then we also got the A samples ready, which the A samples use the current generation chip, which is the Godzilla chip, which is our first generation silicon, which allows us to package our products into these smaller form factor, real productized devices that we can go out and have really compelling conversations with. And we already have, on the strength of that, we already have one great strategic development agreement with a major automaker for the DF sensor line, but hoping to sign many more and also win some major production deals in the not too distant future.
Yeah, that's certainly an exciting avenue for the company. On your most recent call, you reiterated your full year outlook. Do you think you could articulate a little bit how you construct that bottoms up guidance, and maybe give us a little bit of color on this year's seasonality for earnings?
Sure. So one of the things we made a major investment in starting last year after SPACing was go to a commercial team, significantly expanding it. I think we've almost 3x'd it. It's a major investment so that we can go out and win tens of thousands of customers. Ultimately, that's our goal. And to power that commercial team, we have a great set of new business tools, software tools, implemented CRM and things like that, so that we can actually track in a very data-driven way what our progress is on each account and what the opportunities are that exist. And we use all that information, the customer by customer, bottoms up opportunity data that we have entered into that system to derive our guidance. And then layering on top some, there's assumptions on things like win rates and new customer uptake that we layer on top of that. But the fundamental core is the data that's in our CRM. And we've invested for a year in getting that into a really good place. So that is why we reaffirm guidance, because we have the data to support it in our CRM. And then in terms of seasonality, one of the things that everyone, I guess, has picked up on is that we are going to have a major ramp this year in our revenue, and that's unavoidable in a company that is roughly 2xing its revenue year over year. There has to be a significant ramp, and that's kind of just the first thing to point out. If you're used to looking at a company that grows 10% year over year, it's, that's a fundamentally different type of growth that can happen in a very linear way. But 2xing the company like we did last year requires exponential growth, which means that that's going to be layered into the quarters. We're also seeing that there may be some additional seasonality in our purchasing cycles from customers on top of that, that compounds that further. And that's partially due to things like sometimes we sign yearly contracts with customers that don't dictate when they buy within the year, but that they do, they're going to buy that year, which incentivizes sometimes back-weighted or fourth quarter purchases. So we're still learning about that. We don't know exactly if there's going to be real seasonality once we build to larger and larger numbers and kind of averaging takes over, but it could be that there's some back weighting from that as well.
Yeah, thanks. I think that's helpful for people as they're looking at estimates through the balance of the year. Over the longer term, how do you think about the balance between average sale price and costs and sales volumes? How do you think those will trend, and where do you envision margins moving over time?
Yeah, so on the latter, I mean, we see margins for the hardware being between 50 and 60% long term, and it's because we're going after diversification, where there are certain verticals that are going to keep our ASPs nice and high, and versus automotive, we see the consumer auto space being a 20 to 30% margin industry or customer base, but when blended across our company, we still see that it'll be 50 to 60% margins. In terms of ASP and where we see pricing going versus COGS and how that informs margins, we're trying to turn it into a science. I think we have a lot of data we know our COGS trajectory very well, and our COGS is really determined by volumes at this point because the product architecture is mature. We've made the paradigm shift to digital lidar. We've outsourced manufacturing to our partner Benchmark Electronics, and we've shipped over 10,000 units and manufactured more than that. It means that we're able to quote and understand our COGS versus volume in a really with a lot of confidence. And so that just turns then pricing into a science of, our goal is X margin long term. And so you can just quote to volume, it's a sliding scale of this is what the price is if you buy this many. And that will dictate our margin long term. So that is really the way we think about it. But again, layering in how volume plays out over a couple of years. And so we have to put a little sophistication in our pricing strategy by understanding how our volumes increase over the year. But yeah, we're in a really good position to control that, I think.
Yeah, thanks for that color. I think that's important for people that are trying to understand the business model. So with that, we've gotten some questions from our audience, and let me just take a quick look through them. And again, if you have a question, please shoot to me via email at bdobson@chardan.com or drop it into the Q&A. So I guess the first question is, who would you consider to be your core competitors in the space?
So it depends on what vertical where we're talking about. In our non-consumer automotive vertical, it is either really a small number, 1 to 3 legacy analog lidar companies, and so could count on one hand easily the number of competitors in the majority of our non-auto markets. There are some well-established, multi-decade-old industrial lidar companies that we specifically compete in the industrial vertical. But again, you can count on one hand the number of customers, companies there. And in both these cases, it's analog legacy lidar technology that we're competing against with a fundamentally new and more performant product. So it's really good positioning for us. We're super competitive on pricing and on performance in those markets. And then in auto, it's a completely different story because that's where most of the new companies have really focused on, really all our public competitors that have SPAC'd in the last year and a half are all focused on auto. And so it's a much more crowded space with lots of rhetoric and kind of marketing activity that's kind of confusing the messaging of who's really winning. And my view is that no one actually is winning yet. Nothing has been won. So it's kind of a wide open space with a lot of noise. But we feel really good about our positioning there because we think we can offer the lowest cost product at the highest performance with the DF sensor line. And we can also offer multi-sensor suites, which is really important for the industry. If you look out at the end state of LiDAR technology, there's kind of overwhelming agreement that digital technology will dominate LiDAR in automotive because it's solid state. All of their low-cost sensors are digital sensors on the vehicles today, and they're all multi-sensor suites, whether it's radar, cameras, or ultrasonics. And so we're just playing right into the hands of what automakers are familiar with and what they understand in terms of mature technology trends. So we feel really well positioned there.
Sure. Okay, the next question asks you to speak to barriers to entry in the industry and perhaps some of your intellectual property.
So the barriers to entry for, I guess the barriers to entry for competing with Ouster are significant. If you wanted to try to compete with our digital lidar technology, we have a very significant IP portfolio, which I think at the end of the day, you do need to rely on patents in some cases, and we've really made major investments in the patents that we have. We have, I think, over 50 granted patents, over 300 pending patents. We acquired a number of new patents through our acquisition of Sense Photonics. And if there are a couple kind of independent patent IP reviews of the LiDAR space, and Ouster is commonly at the top of the quality rankings for our IP portfolio. So I feel really confident in that. And there's also good precedent of semiconductor companies and the semiconductor industry upholding strong patents for semiconductor technologies. So feel good about that. But there are other barriers to entry. I mean, merely simply the number of customers that we're going after and the amount of effort it takes to win thousands upon thousands of customers. That's something that there's no playbook for that. There's no product that you can disassemble and try to replicate. Building a company that can support thousands of customers and serve them and service them and keep them happy is something that is fun. It's really fundamental and hard to copy. And so I like that we're going after such a diversified set of customers because it's just hard to win every single one of those back. And there has to be a really good incentive to do it. And that's why we're able to do that to the legacy LiDAR players because our products are so much better than what came before them. So there's a technology and product reason to switch. But from other perspectives, there aren't great reasons, or customers in industrial don't really want to switch because there are long production cycles. There's certifications that need to happen. And so those are things that create very sticky customers in those industries as well.
All right, and our next question has to do with exclusivity agreements with OEMs. Is there the potential for you to reach an exclusivity agreement with an OEM going forward?
I think there may be, but it's not something you should bet the company on. So it'd be great if we signed something exclusive with an automaker. The auto industry is really focused on never allowing that to happen. Dual sourcing of the entire supply chain is like a major goal of any automaker or tier one. But but certainly they don't achieve that. Like if you look at automotive processors, CPUs and ECUs that go in cars, like there isn't dual sourcing of NVIDIA chips that go into cars, or dual sourcing of Mobileye chips that go into ADAS systems. So that it doesn't always happen, but yeah, I wouldn't hold your breath for exclusivity.
Great. Well, thank you for answering all of our questions in such detail. It's been a pleasure having you join us today. I think that this has been excellent use of time. And we look forward to hosting you again in the not too distant future.
Thanks for having us. This was great.
Thank you so much.